Welcome to Make America Healthy Again. Join Dr. Charles Antinori and friends as they share solutions, tips, and insights that only doctors know for creating better health. Here's Dr. Antinori.
This is Make America Healthy Again podcast with Dr. Antinori, and today's guest is Joseph Yocavitch. We're going to talk today about insurance, starting with long-term care. Let me just let Joe just introduce himself, give you a little bit of his background.
Thank you, Doctor. Good morning, everyone. My name is Joe Yocavitch. I'm a certified financial planner here at my firm called JML Financial Group, and we do full service planning for clients. What not only having people put money away on a portfolio basis, but also protect that money with guaranteed vehicles that we use quite a bit. Our motto is real simple. We don't want anyone to run out of money. We want to pay the least amount of taxes to the IRS, and we don't want to be a burden on your family. And the third one that the doctor asked me to come on is a burden on your family. And the burden on your family indicates that, what happens if you go into a facility or you need care. I've been in the business for, believe it or not, 40 years. I have no intentions of getting out. I love what I do. And we provide pretty much uncommon financial solutions because I'm duly licensed. That means I have a securities license so I can share with people investment portfolios, and I have an insurance background. Also, I'm on the radio, talk radio on 1210 WPHT. I'm on every Saturday and Sunday, Saturday at 5 p.m. and Sunday at 9 a.m. And the show's called The Heart of Your Money. No coincidence because the doctor is a surgeon, so we use the same philosophy on making sure we have a good, strong heart and everything's beating correctly and everything's moving around. But we want to talk about something it really is important now more than ever is long-term care and how to deal with it. And according to the Administration of Aging, nearly 70% of people aged 65 years or older will require some type of long-term care. This is amazing because people are living longer, and being what it is, it's very, very costly. I'm not just talking about in-home, but I'm also speaking about assisted living communities, nursing homes, in-home, adult care, and the costs are phenomenal. I'll throw some numbers at everyone. Most people start to consider at least looking at long-term care in their 60s. The cost to buy a personal individual long-term care policy would range anywhere between $5,000 a year to $10,000 a year, again, depending on the benefits. Some of the costs that if something like this could happen or would happen, semi-private room in a nursing home is probably close to $95,000 a year. Private rooms are over $110,000. One-bedroom units and assistant care units are $55,000. Adult care, healthcare facilities are $20,000 plus. And even a home health care aid would run you somewhere over $60,000. So you can see the cost can be astronomical when you're going into retirement. This is a draw upon what you're saved for. And there's a couple of ways to skin the cat here. What we found that a lot of people, when we got in and being in the business 40 years, we wanted to coordinate with our clients what are the best strategies going into retirement. And, years back when I was presenting long-term care, it was really inexpensive. And I would share with people the fact that, remember, when you buy this product, the premiums are not guaranteed. And what was happening, the insurance companies never factored the actuarial numbers good enough because what was happening in the later years of the policy and the person's age, the dollar amount, the premiums, what they pay was going up. So the premium was going up and the benefits were being asked to come down. Not a good combination. And we see that all the time now. So what's happening, instead of sometimes buying long-term care, Doc, what do? Yeah. And you have to protect that because, God forbid, if something happened to you or anyone that's in their 60s, 70s, or 80s, where are they getting the money?
I'll give you my own personal experience. I have long-term care. I would say I was lucky. I started, my old accountants got me. They were very expensive up there in Cherry Hill. But they got me they sold me the long-term care insurance. And I was probably early 50s. So I'm paying, I think it comes out to about 3,200 a year, something like that. And I have, the last time I checked, about $11,000 or $12,000 a month of coverage. So I'll probably keep it. And I just asked you, before we came on, my question, I started thinking about it, like, if I live to 90 or 100, do I pay that until the very, and I don't use it, I have to keep paying that. And it turns out I do.
Yes, unfortunately, if you want it, you have to have it, and you have to pay for it. So it doesn't stop. Yeah. But what has happened, which is really interesting for our industry, that what I see in terms of presenting it with clients all the time, I make them aware they have a choice. You can purchase individual long-term care, and there's an issue to dealing with that, meaning that you have to go through underwriting. When I speak of underwriting, I'm talking about you have to go through a medical underwriting service that makes sure that you're as healthy enough that they would insure you. Not everyone passes that test.
Let me interrupt you again to just illustrate so people might know what we're talking about. That was a pretty good physical exam that I had to take. They had somebody come, and this wasn't just the usual thing where they check your blood pressure and they drew blood. AIDS was the big thing. They got to take your blood to make sure you don't have AIDS and anything else horrible. But with withdraw blood, I think I did a few pull-ups for the lady just to get the best rate and everything like that.
Right. I mean, years ago, luckily, I got certified for long-term care. So I'm certified in not only presenting it, but not just a health background that I have, but again, certification of presenting it. And it's bizarre because the costs are just increasing. And more importantly, he said earlier, the health check for you to get it underwritten by an insurance company, you got to jump through some hoops. So it's not just a slam dunk. This is some things you need to be dealing with. And if you're not as healthy as you might think you are, especially when you get older, high blood pressure, diabetes, overweight, et cetera, it could be an issue or you might not even get long-term care at all, individual.
Joe, let me interrupt you again just to, illustrate things people listen.
Absolutely, anytime.
The one thing that happened to me, only once so far that I remember, they contacted me and they said that, like, my cost of living, they raised the amount of money that you're allowed, that you can use every month. In other words, that, like I said, I think it's around $11,000 a month, which would barely cover most of the nursing homes around here, by the way, just to illustrate again to people that don't know what these numbers are. But $11,000 a month sounds like a hell of a lot of money. The good part of it too is that apparently you can use that money to pay, like, if even a family member or something. I'm sure you have to jump through hoops to qualify for that too, but apparently you can some ways use it to pay a family member if they have to take care of you as a custodian kind of thing. But what they did at one point, they contacted me and they said, like, you were going to change your cost of living increase. I had a really good cost of living adjustment plan, and they gave me some cost of living adjustment plan that's like 3% a year. I had to step down to like a lower. Otherwise, I think I had to pay a higher premium anyway. But but if I didn't do that, I was going to have to pay an even higher premium. But that's only happened once, and I haven't heard anything since then. That had to be like 5 or 10 years ago. But
and you were lucky because now it doesn't work that way. And it's a block of business that the company you're with might have been profitability for them. But a lot of companies,
Unum. You were mentioned,
Unum, right? Yeah. And they're not around anymore. They don't even present it to clients anymore. I can't even get a human policy. Unum is no longer in existence with what we are able to present. So there's a lot of other ones that we have access to, but Unum, unfortunately, is no longer dealing with long-term care. So you're right about that. What was happening is that the premium, the deposits that you were making for the long-term care contract were going up and the benefits were going down. So you had to make a real decision what you're going to do. And we do that with clients almost weekly of dealing with that situation. Make sense? The other thing, what we found in long-term care planning and long-term strategy planning with our clients, we realize that there's other benefits out there. And the two benefits that I'm going to mention quickly, one is life insurance. Now, life insurance policies have they call a ADB rider, which stands for Accelerated Death Benefit Rider, which allows someone with a life insurance policy who is terminally or chronically ill to access a portion of their policy death benefit while they're still alive. Because if you think about it, if you have a life insurance policy and you have it enforced, a couple of things are going to happen. Somebody's going to get paid out that money. But what we're seeing is using the policy prematurely before that happened, you're actually able to access percentages of the policy. Anywhere between 50 to 75% of the death benefit could be utilized for long-term care, and it's not taxed. It's all tax-free. Again, you have to qualify, but there's no cost for the individual to purchase that policy. Now they're being built in because of what you said earlier. You know, these policies were increasing in pricing and decreasing in benefits, and the life insurance game got together and said, listen, people have life insurance, let's add this in because we're going to pay a lump sum out eventually. Let's use this now before that person passes. So again, it's a great opportunity for somebody.
Let me interrupt you again and introduce another family vignette that illustrates this point, I think. And first of all, I didn't know that you could tap in. I've heard on TV at night they talk about tapping into your life insurance policy, but this makes a lot of sense because I'm sure like your heirs would much rather, if it comes to the point where you have to go into a nursing home, I'm sure the heirs would rather have that the life insurance policy, pay for the nursing home now, rather than be counting on, whatever it's going to be, a year, 2 years, 5 years, that they're going to collect the benefit, down the line,
Absolutely.
The story was my brother-in-law, his parents, they lived to like 95 and 97, and they ended up to the point where they were in like assisted living for a long time, but then they finally had to go into like a real nursing home. And there are a couple of family members, and it was a lot of money, so it took a little while before they could convince that get him in. So at one point his parents had to live with him and my sister for like a couple of weeks. So I was visiting them after that, and I said to them, my brother-in-law, I said, hey, I heard your parents live with you for a couple of weeks. How'd that go? And he goes like 17 days, 6 hours, and 12 minutes. Well,
you know what happened, Doc?
Again, they were deep in their 90s, but And that's
I'm gonna tell you, you're at somewhat fault of this happening because you're keeping people living longer.
Right. Right. Yes.
I mean, think about it. I mean, with technology, you're well aware the things you did 40 years ago, you're completely different than you're doing today.
I say that half the people I'm semi-retired now, so I'm not operating anymore. But a couple of years ago, I was operating. When I was operating, half the people I operated on in my later years wouldn't have operated on in the early years because number one, like they say, they'd be, like you said, they'd be dead. They wouldn't have lived as long enough to get this operation. And number two, if they were alive, we would have thought, they're too high risk for the surgery. We wouldn't have done it. But with the technological improvement, the life expectancy and the technological, like minimally a gallbladder. When I started out, it was an open operation. It was a big operation. People died. People still do once in a while. People had bad complications. You were in the hospital at least a week, when I started out. If everything went well, it was basically 5, 6, 7 days in the hospital. By the time I got done, it was like you go home after the operation.
Right. Well, you have to love technology. It's good for all of us, but you have to take advantage of it. The other thing, it's funny you say that, because I'm going for a knee operation, and it's not what it used to be. Now it's a knee replacement. So I'm going to be walking in 4 weeks and be rocking and rolling. But it's funny, if you look at, 20 years ago, you got people that had knee done. When they had your knee done, it was a big scar and it was a long recovery. Today, it's completely different. So long-term care is an issue that I talk about all the time because it's being a burden on your family. It really is. Right. And if you can take some of that risk off the table and use the life insurance or an individual policy, that's one thing. But I have another one. Yeah. Now, because of the insurance companies getting together, and some folks have annuities, different type of annuities. You got equity indexes, growth annuities, etc. But if you have an income annuity, now they're built in what they call income doublers, where you have a lump sum dollar, you'll be getting money on a monthly or yearly basis, guaranteed, and up to 5 years inside the policy for you, it will double your normal payout for 5 years. And this will be eligible for anyone that cannot perform 2 out of the 6 ADLs, which is the activity of daily living.
Right.
Eating, bathing, dressing, grooming, mobility, toiletries, etc. So again, when you coordinate how we do what we do with JML Financial Group, Doc, we're not only looking at your money, we're looking at the longevity of your money, where you don't become incapacitated or you have to wipe out half your savings just for those type of situations. And it really is an issue when I'm talking to clients all the time. You can just look at them and talk to them, and they see, and you can feel the stress level diminishes, because you're really helping somebody preserve their own well-being and not to be a burden on their family. And I always say, I don't want to be a burden on my family. How am I able to do that? And what you said earlier, you can actually have family members that not necessarily be certified actually take care of you and still get compensated to do so. So we do that with our clients. Almost every single client I speak with, the conversation comes up. Sometimes they don't know what to do about it, how much it's going to cost them. And sometimes there's no cost, but we build these things in for them. And they really appreciate the fact that we're helping them build a long-term strategy that, they'll never run out of money. And the fact of the matter is they will never be a burden on their family.
Absolutely.
So for us, it's a perfect time, because like I said earlier, the average age, even with COVID hit, there was a little a niche with people passing away earlier because of COVID. But now we're seeing that back up again, where people are living into their 80s and 90s. Yeah. And the question becomes, what type of lifestyle do you want to have? What do you want when you go into retirement? You want to make sure that you're not a burden on your family. And that's our big concern when we're dealing with clients, all over the country. We deal with clients and such.
Even COVID, Joe, I read the average age of death from COVID was higher than the average age in most places. The average age in most civilized countries, the average age of death from COVID was higher than the average life expectancy. So most of the people that died from COVID were kind of old, nursing homes. That's where people. And the other thing about it that I see, just like living in Cape May, walking on the beach a lot. I think COVID really cut down on obesity and things. People are taking better care of themselves if the COVID. They realize,
I'm still a little shocked when I'm driving in my car, doctor, and I see a guy in a car by himself with a mask on. I'm like, what's that about? So for us, being with the firm as long as I have, my wife works with me, my son works with me. We put together plans for people, and every person that we talk to, that conversation comes up. That's one of our main conversations about you need to address it, because it wasn't addressed 30, 40 years ago, because longevity was not a conversation at much. But now longevity plays a major part. And when you're talking to people about that, they normally know someone close to them are going through this.
Yes, absolutely.
And it's devastation. It really is. It's devastation for the individual. You can wipe out all the savings. And what better way if we can leverage it tax-free to be able to take care of yourself in your, in retirement years, to prevent some of these situations that could happen to us. And the average stay, just to let you know, Doc, for the average stay for a male in a nursing home. And again, I'm going to use your last name as an example because you're Italian descent. Italian people do not believe of putting people in a nursing home. I just find that to be true because I deal with a lot of Italian folks. I don't want to pigeonhole you, but they'll keep you home as long as possible. Well, guess what? We can now pay someone, a family member, to watch that person at home. So it really makes what we talk about better for the individual, for the family. So any money that's going to be passed along inheritance-wise, they can be the benefactor of that. So that's what we believe in. We really, truly believe in comprehensive, being objective, and making unbiased recommendations to be able to, share with them conversations about our history of what we've seen of 40 years in the business. And we've seen a lot of situations that could be ugly and turn ugly because they don't have the proper planning. And we believe that's one of the most important pieces of the puzzle when you're dealing with financial planning. And we believe that because we're fiduciary and we're independent of what we speak to people about, it's important because we're not a bank, we're not a corporate employer. We manufacture different strategies and products just for the client and customize everything we do for them.
Well, that's great, Joe. I say, what you're talking about. My we're getting near that point right now. My mom's 97. She's been independent. She's still independent, totally independent. She drives to church. That's the only place she drives. It's like a mile, and she takes the back streets, to get to church every day. But other than that, she doesn't drive anymore. And but we're at the stage now where her short-term memory. I see my short-term memory going at 77. She's 20 years older than me, and her short-term memory is going. And we're at the stage now where my sisters who live closer to her, somebody's trying to stop in every day and just make sure things are okay. But I wouldn't be surprised if she lives another 3 or 4 years that we're going to have a full-time kind of thing. And it's probably going to be, like you say, living with a family member,
Oh, yeah. I mean, I see it all the time. And it doesn't necessarily mean, doctor, that the person has to necessarily be old. I'm dealing with someone right now. Yeah. She's in her 60s and just found out she has ALS.
Yeah. Oh, wow.
And now it's an issue of, and we went to school together, and I'm seeing this situation right in front of me and how her family members are going to have to help her because she's breaking down. It's only been 1 year. And the fact of the matter is, if we want to make, unfortunately, I didn't put anything on her, but my point is I'm seeing certain things happen younger with people. So, our job, because we have a family business, so our philosophy is let our family help your family to minimize taxes, maximize all the opportunities that are available out there, and basically secure your legacy in a way that we can help that individual that will go into retirement never worrying about something like this that could happen to them and really hurt them going forward with them. So that's our belief system.
All right, Joe, we have to finish up. I wanted to mention a couple of things quick. Since you mentioned ALS,
sure.
I just want to tell you that is like one of the worst diseases of all time. I have I get this little mailer that they give me that tells you like the life expectancy of various things. And lung cancer, we all know lung cancer is horrible. Lung cancer has one of the worst 5-year survival records of even with all the chemotherapy and everything that we do now, immunotherapy. It's still like, 25% 5-year survival across the board. ALS is like 5% 5-year survival. Right. ALS, Lou Gehrig, we're talking about Lou Gehrig's disease for the people that, know it by another name.
Well, you know why, doctor? I say that to you because one of my closest compadres, I'm talking friend of mine growing up, the whole 9 yards, and he also was one of my Italian good friends. And he was as strong as a bull. We both played football together, and I saw him. He was in his 40s and got it. Yeah. And I watched that happen. And I'm talking about a strong man, great guy in the business with us. And I watched it happen in front of me. And I never even heard of ALS other than the movie I saw.
Right. Yeah, Pride of the Yankees.
Remember that? And that's the only thing I couldn't understand it at that time.
Yeah.
But when I actually saw it up close and personal, you're right. That's something that I was really hard to swallow. But now I'm seeing this friend of mine that went to high school with us. And it's a woman in her 60s, which is kind of uncommon, I find.
I think it's more common in men, or slightly more common in men, I believe. Yeah.
Yes, a lot of football players get it because of the trauma on their head of hitting. That was the reason why they were talking. A couple of ball players that had it. So for us, we want to make sure we're protecting a client. We can't do everything, but that's one of the components we use of long-term care planning for them for longevity. And I just want to say in closing up, Doc, thank you very much for having me on. And if there's anyone that wants to contact us through our podcast here, my name is Joe Yocavitch. My company is JML Financial Group, and my direct line, if they wanted to get a hold of me, either they can. My website is being jmlfinancialgroup.com, or our phone number at 856-751-1771. You can ask for Joe, you can ask for Michael or Lynn. All of us can help you and put you on the right track for yourself.
All right, Joe. Well, that's it. We're going to close it up for Make America Healthy Again. And we have another podcast coming next week, talking to some of the surgical residents about the difficulty of surgical training. But thanks again, Joe. I learned a lot. Thank you very much.
Thank you very much, Doc. It's always a pleasure talking to you and your organizations, and I would be more than happy anytime to do this again for you.
Okay, we might be doing that, Joe. Thank you. Goodbye.
Enjoy the summer.
Okay, you too. I'll see you on the beach.
You got it.
Bye-bye.
Bye.